The number one question I get in my past 10 years of mortgage experience is, what is your rate? And obviously it's an important one. Now more than ever, people are shopping more lenders to get the best rate. But this is not a quick and simple answer. This is DPeters, Senior Mortgage Advisor, debunking the mortgage process. When I get a new client and right off the bat they ask me, what is your rate? I know right there and then they have no idea what they're doing. And I take it upon myself to educate them. And this is exactly why I got into the mortgage business, for helping people. So simply asking a lender, what is your rate, without knowing these 5 key pieces of information is impossible and won't be accurate. I'll also be doing another video on how to shop a lender. Please follow and like my page so you can be updated. Okay, so what are the 5 key pieces of information? Number 1 is credit and income. Now, obviously, we'll need to know your credit score and not your Credit Karma score. With mortgages, we pull all 3 credit bureaus. Each one is going to have a different score. And we use your middle score for qualifying. And it's not just your credit score. By taking a look at your whole credit profile, you might qualify for one program and not another. And simply telling me what your credit score 10 times a 10 will not be accurate. And your debt to income ratio has a huge impact on what direction we take. Number 2, loan to value, or LTV. Loan to value is the actual loan amount versus what the appraised value is. If you're purchasing a property, how much you're putting down, and if you're refinancing a property, how much do you owe versus what the appraised value would be. So for example, if you're buying a home and you're putting 5% down, your LTV would be 95%. And if you're refinancing a property, and let's say you owe $300,000 and the estimated appraised value is $600,000, your LTV would be 50%. Lower LTVs come with better rates. Higher LTVs come with higher rates. And number 3 is the type of property. Is it a single family home? Is it a condo? Is it a manufactured home? These all can adjust the rate. Number 4, occupancy. Are you buying a primary home where you're going to live? Is it going to be a second home purchase? And what qualifies for a second home? Is it an investment property? The hierarchy for rates is you're going to get the best interest rates on a primary home. The next would be a second home. And then the third would be an investment property. And number 5, the type of mortgage. There are generally 6 types of mortgages. We have conventional, we have FHA, we have VA, we have jumbo, we have USDA, and there's non-QM. And guess what? All of these have different rates. I mean, even what state you live in can adjust the rate. So all 5 of these aspects can adjust the rates. So by simply just asking what's your rates, it's going to be impossible for us to know unless we gather some more information from you. So now you're educated on the basics of what goes into a rate. Also, there's another huge aspect of buying the rate down, which I'll go over in another video. So if you're looking to buy or refinance a home, don't be that guy or girl with the first question out of your mouth is, what's your rate? Please reach out to me at any point in time if you have any questions. I'm always here to help. Look forward to talking to you soon. Thanks.